Have you ever dreamed of investing in real estate? Of watching your wealth grow through the power of property? For most people, that dream feels out of reach. They imagine needing a huge down payment, dealing with tenants, and fixing leaky faucets at 3 a.m. It sounds like a headache, right? What if there was a way to get all the benefits of real estate investing without any of those hassles? A way to build a powerful portfolio of properties without ever having to own a single one? It might sound too good to be true, but it's not. Today, we're going to unlock the secrets to investing in real estate without buying property. We'll show you how to get started with as little as a few dollars and how you can build a powerful stream of passive income that can help you achieve financial freedom. If you're ready to break free from the paycheck to paycheck cycle and start building a brighter financial future, you're in the right place. So, how can you start investing in real estate without the headaches of being a landlord? The first and most popular way is through something called a real estate investment trust, or REIT. Imagine a company that owns and operates a massive portfolio of properties. We're talking about everything from giant shopping malls and luxury apartment buildings to sprawling office complexes and high-end hotels. These companies generate a steady stream of income from rent and leases. Now, what if you could own a small piece of that company and get a share of those profits? That's exactly what a REIT allows you to do. When you invest in a REIT, you're essentially buying shares of a company that's in the business of real estate. It's just like buying a stock in any other company, like Apple or Amazon. You can buy and sell these shares easily through a regular brokerage account, which means you have the flexibility to get in and out of the market whenever you want. This is a huge advantage over owning physical property, which can take months or even years to sell. But the real power of REITs lies in the passive income they generate. By law, REITs are required to pay out at least 90% of their taxable income to shareholders in the form of dividends. This means you get a regular, predictable stream of cash flow without having to do any of the work. It's like being a landlord without the late-night phone calls and endless repairs. You just sit back and collect the checks. And you can start with just a few dollars. You don't need a massive down payment or a perfect credit score. If you have a brokerage account, you can start investing in REITs today. It's the most accessible way to get into the real estate market and start building your wealth. Now, if you're looking for a more direct way to invest in specific real estate projects, there's another exciting option called real estate crowdfunding. Imagine a group of real estate developers who have a fantastic idea for a new project. Maybe it's a modern apartment complex in a growing neighborhood, or a state-of-the-art office building in a bustling city center. They have the expertise to make it happen, but they need funding to get it off the ground. That's where you come in. Real estate crowdfunding platforms are like a bridge that connects investors like you with these developers. You can browse through a variety of projects, from residential to commercial, and choose the ones that you believe in. You can invest directly in these projects with a relatively small amount of money, and in return, you get a share of the profits. This is a powerful way to get involved in real estate at a much deeper level. Unlike REITs, where you're investing in a broad portfolio of properties, crowdfunding allows you to pick and choose the specific projects that you want to back. You have more control over your investment, and you can see exactly where your money is going. And the potential returns can be very attractive. Because you're investing in private market deals, the returns can be significantly higher than what you might get from a publicly traded REIT. We're talking about annual returns that can range from 2% to as high as 20% in some cases. Of course, with higher returns comes higher risk. And it's important to do your due diligence before investing in any project. One thing to keep in mind is that many crowdfunding platforms are only open to accredited investors. This means you need to have a certain level of income or net worth to participate. However, there are a growing number of platforms like Fundrise and Realty Mogul that are open to everyone, regardless of their income. So even if you're not a millionaire, you can still get in on the action. We've talked about REITs and crowdfunding, but there's another powerful tool that you need to know about: real estate, ETFs, and mutual funds. If you're familiar with investing in the stock market, you've probably heard of ETFs and mutual funds. They're like baskets of investments that hold a variety of stocks, bonds, or other assets. Well, you can apply the same concept to real estate. Real estate ETFs and mutual funds are funds that invest in a portfolio of real estate securities. Most of the time, these funds are made up of a collection of different REITs. So instead of picking and choosing individual REITs, you can buy a single share of an ETF and get instant diversification across the entire real estate market. Think of it like this. Buying a single REIT is like buying a single stock. You're putting your money into one company. But buying a real estate ETF is like buying an entire index fund. You're spreading your investment across dozens or even hundreds of different companies, which significantly reduces your risk. And just like REITs, real estate ETFs are incredibly easy to invest in. You can buy and sell them throughout the day on a stock exchange, just like a regular stock. This gives you a ton of flexibility and liquidity, which is something you just don't get with physical real estate. ETFs trade like stocks, so their prices can fluctuate throughout the day. Mutual funds, on the other hand, are priced once at the end of each trading day. ETFs also tend to have lower fees than mutual funds, which can make a big difference in your long-term returns. For most beginners, real estate ETFs are a fantastic starting point. They offer a simple, low-cost way to get broad exposure to the real estate market, with all the benefits of diversification and liquidity. Now that you understand the power of REITs, let's take a closer look at the different types you can invest in. It's not a one-size-fits-all world, and knowing the difference can help you make smarter investment decisions. First, we have equity REITs. These are the most common type of REIT, and they're what most people think of when they hear the term. Equity REITs own and operate income-producing real estate. They're the ones who own the shopping malls, the apartment buildings, and the office towers. The revenue comes primarily from rent, and they're a great way to get direct exposure to the appreciation of real estate assets. Next up, we have mortgage REITs, or MREITs. These REITs don't own any physical property. Instead, they invest in mortgages and mortgage-backed securities. They make their money from the interest on these loans. Think of them as the financiers of the real estate world. MREITs can be a bit more complex than equity REITs, and their performance is closely tied to interest rate fluctuations. However, they can also offer very attractive dividend yields. Finally, we have hybrid REITs. These REITs are a combination of both equity and mortgage REITs. They own a mix of physical properties and real estate debt. This diversification can help to balance out the risks and rewards of both types of investments. So, which type of REIT is right for you? It really depends on your investment goals and risk tolerance. If you're looking for long-term growth and a hedge against inflation, equity REITs are a great choice. If you're focused on generating a high level of passive income, mortgage REITs might be more your style. And if you want a little bit of both, a hybrid REIT could be the perfect fit. We've covered the three main ways to invest in real estate without owning property: REITs, crowdfunding, and ETFs. Each of these has its own unique set of advantages and disadvantages, and understanding them is crucial to making the right choice for your portfolio. Let's start with REITs. The biggest advantage here is liquidity. You can buy and sell REITs on the stock market just like any other stock. Another major pro is diversification. With a single REIT, you can get exposure to a wide range of properties across different geographic locations. And of course, there's the passive income. The mandatory 90% dividend payout means you get a steady stream of cash flow. On the flip side, REITs are sensitive to interest rate changes. When interest rates go up, the value of REITs can go down. Also, the dividends you receive are typically taxed as ordinary income. Now let's talk about real estate crowdfunding. The main draw here is the potential for higher returns. Because you're investing in private market deals, the returns can be significantly higher than what you'd get from a publicly traded REIT. You also have more control over your investments. However, crowdfunding comes with its own set of risks. The biggest one is illiquidity. Once you invest in a project, your money is often tied up for several years. There's also a higher risk of losing your entire investment, and many platforms are only open to accredited investors. Finally, let's look at real estate ETFs. The biggest advantage of ETFs is instant diversification. With a single share, you can get exposure to hundreds of different REITs. They're also very low cost. ETFs typically have much lower expense ratios than mutual funds. And just like REITs, they're very liquid. The main downside of ETFs is that you have no control over the underlying investments. Also, while they're less risky than individual REITs, they're still subject to market volatility. As you can see, there's no single best option. It all comes down to your individual goals, risk tolerance, and time horizon. So you're excited about the possibilities, but you're probably wondering, how do I actually get started? It's easier than you think. For REITs and real estate ETFs, the process is very similar. First, open a brokerage account. If you don't already have one, you'll need to open an investment account with a brokerage firm. There are many great options out there like Fidelity, Vanguard, and Charles Schwab. Opening an account is a simple online process that usually takes less than 15 minutes. Next, fund your account. Once your account is open, you'll need to deposit some money into it. You can start with any amount you're comfortable with. Then, research and choose your investment. You can use the brokerage's research tools to find REITs and ETFs that match your investment goals. A great place to start is with broad market real estate ETFs like the Vanguard Real Estate ETF. Once you've chosen your investment, you can place an order to buy shares. It's as simple as entering the ticker symbol, the number of shares you want to buy, and clicking a button. For real estate crowdfunding, the process is a little different. First, choose a platform. There are many different crowdfunding platforms out there, so you'll want to do some research to find one that's a good fit for you. Some platforms like Fundrise and Realty Mogul are open to all investors, while others are only for accredited investors. Next, create an account and verify your identity. Then, browse and select a project. You can browse through a variety of different real estate projects and choose one that you believe in. Each project will have a detailed overview, including the business plan and expected returns. Finally, invest directly through the platform. You'll typically need to invest a minimum amount, which can range from $1,000 to $25,000 or more. So there you have it. 3 powerful ways to invest in real estate without ever having to own a single property. We've covered REITs, real estate crowdfunding, and real estate ETFs. Each of these strategies offers a unique way to get into the real estate market, build your wealth, and generate passive income. For centuries, real estate has been one of the most reliable ways to build long-term wealth. It's a tangible asset that provides a hedge against inflation and a steady stream of income. And now, thanks to these innovative investment vehicles, it's more accessible than ever before. You don't need a huge down payment, a perfect credit score, or a team of lawyers and property managers. All you need is a desire to build a better financial future and a willingness to take that first step. So what are you waiting for? The dream of real estate investing is no longer out of reach. It's right here, at your fingertips. Whether you start with a single share of a REIT, a small investment in a crowdfunding project, or a diversified real estate ETF, the most important thing is to get started. Your future self will thank you for it. Thanks for joining us on Frankie Finance. If you found this video helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our next video. And if you have any questions, leave them in the comments below. We'll see you next time.